Hey, what's up, everybody? Tuesday, time for an update and a reminder. Yesterday was Monday, so I put out the new edition of MMT Trader. If you want to get that edition, please go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. Don't forget, I also offer Zombie Trading. Zombie Trading is a daily Forex signal service. It is based on understanding zombie behavior. We know how they're going to react based on news events and economic data. So we front run the zombies, and we take their money and we get out before they die. Zombie trading is also available on my website at pitbulleconomics.com. And yes, it has stop losses. So anyway, yeah, MMT Trader, I put it out. So if you want to get that, just go to my website. So what are we going to talk about today? Dollar coming back down, folks. Folks, if you look at a long-term chart of the dollar index, and the Fed has its dollar index that it publishes against the major currencies, which goes back to 1971. And of course, 1971 was when the U.S. went off the international gold standard. Nixon closed the gold window, and we were no longer on an international gold standard. So if you look at the dollar index over that period of time, it has been, and by the way, ever since Bretton Woods, which I guess was 1944 to mid 1940s, the world has been on a dollar standard basically, and the dollar is the world reserve currency. Everybody knows that. I mean, we've had this conversation. It is widely held as the reserve currency. So the point I'm making here is that even though the dollar is the reserve currency, it is widely held throughout the world. It is in demand. A lot of you want to talk about demand, the demand for the dollar, because there are few, if any, alternatives right now, even with everything that is going on, with the U.S. using the dollar as a weapon of economic warfare, that it is very hard for other countries to very quickly or immediately in that manner to switch to an alternative. There really are there are not many that exist, if any, right now. I mean, we are starting to see the emergence of bilateral trade agreements in local currencies, but still the dollar and a lot of the arguments that I hear about, the dollar's going up because there's no other alternative and this and that. So getting back to my point that I am making, if you look at the dollar index since 1971, when we went off the international gold standard and it really became ubiquitous and widely held and the global reserve currency, it has been going down. Now that has been a gradual decline, punctuated by periods of spikes in the dollar. You can see it very clearly if you look at a chart of the dollar index. But the trend has been down over that period of 40 plus years, almost 50 years now. And that is actually as a consequence of the fact that it is the reserve currency. It might sound counterintuitive, but it is not. I mean, if the world is net saving in dollars, in other words, the world is holding more dollars than it actually needs for transaction purposes. It is saving some in addition to what it uses in commerce and transaction and clearing. There is a surplus of dollars in the world. All right? And this has led to its gradual decline. Someday, maybe in the future, if the dollar loses reserve status and the United States becomes a net exporter and runs trade surpluses, the dollar will probably rise just like, the yen, or just like the old Deutschmark or the current euro, whatever. The euro has its own political problems, but still, it has held very, very steady if you think about it. when the euro began its inception, it was about 117 to the dollar. So today it's around 115. So with everything that's going on, and it has fluctuated in that time, and has been as high as what, 165, I believe, around I don't know, 2006 or something like that. 2007, it got as low as 104, 103, and now it's around 115. So it's held very steady. But anyway, the dollar has been going down. Now, when you throw in all these other new developments, such as this geopolitical, the use of the dollar as a weapon, the change in monetary policy by the Federal Reserve since 2015, the raising of interest rates, which is a fiscal expansion, the fiscal expansion itself that is going on now, where this year we are on track to exceed the 2009 stimulus year. By the way, why did the dollar go up from 2009 to 2015-16? You saw the U.S. budget deficit go from almost 1.5 trillion to 400 billion. So when everybody was screaming QE and money printing, remember, they're printing money, they're printing money, they're printing money, they're printing money. Remember that? What was actually going on was an unprinting of money in the tune of about $1 trillion. Take the budget deficit from 1.5 trillion to 400 billion. You had a 1.1 trillion unprinting of money. That was a net removal of $1.1 trillion. All right, that's why the dollar went up. And I was very bullish. I made a video in 2009 saying the dollar was going to go on a long-term uptrend. But now it's over. But the point I am making is, don't expect this current dollar rally that we have seen to suddenly reverse in some kind of a sharp decline and go back down. It will resume this long-term pattern of just this slow and steady decline that we have seen over the years. That's the nature of it. That's the character of it. That's what's happening. So we had this 5-month rally. It was all driven by fear and worries about trade wars and rate hikes and everything else. It got crazy. We have seen concentrations, speculative concentrations in the dollar, or if you want to talk about individual currencies, short positions on the part of speculators, extremes in some cases that we have never seen before. So that's unwinding that is happening, okay? Because the overriding fundamental is that long-term gradual decline in the dollar until one day when the dollar loses its reserve status and the United States becomes a net exporter, which I said was going to happen a long time ago, and I've been saying that, and I was saying it not because, we spend too much, we're too much in debt. No, that has nothing to do with it, and we're not even in debt. There is no debt. It's all dollars. I said that because it would happen as a result of our own policies. Exactly what you see happening right now. The desire by our policymakers to say, we want to be like the next China. We don't want the Chinese people to labor and toil for meager wages to produce goods that we can consume for our paper money. We want to do that. We want to labor and toil and consume resources and despoil our environment and everything else to produce goods that we can then ship away to the rest of the world for their currency. And that's exactly what the current policy is. Why that is deemed great, I have no idea. But that's exactly what is going on. And ultimately, a classic example, I'll tell you right now, is look at oil. How many years have we been hearing, we need energy independence. We need energy independence. We have to get off of this dependence on OPEC and foreign oil. So what happens? We get involved with this fracking. We mess up the environment. Yes, we find an abundance of new oil. Hooray! We achieve energy independence. And what do? Let's export it. Let's ship it away. Let's send it all the way to foreigners. How crazy is that? How crazy is that? But that is what's going on. You can see it. It's very clear. So yeah, that's it. Dollar will start to head back down. It's already heading back down. My call was absolutely correct. We are on the right side of this, folks. I am on the right side of this. My subscribers are on the right side of this. What they have learned here is a tremendous, invaluable lesson in mental game. I'm getting emails from many of them now saying, Mike, having gone through this period, it has changed me. It has changed me. And it does. I'm going to talk about that later in another video. See you later. Bye-bye.